Alright, hey everyone, Phil C from Brisbane City right here, and I did a intraday trade today, and it was the Gartley Pattern on the Aussie Yen 1 hour time frame. We just came off the back of 7 winning trades inside the Star Live trading room. Whenever you have a win streak, there's something that follows that.
Welcome to Star Prosper with Phil C.
And what follows that is typically a drawdown. So if you have 7 winning trades in a row, you know that you are edging closer and closer to the next, you're getting closer and closer to that losing trade, And we had an intraday trade. That's what we're going to jump into right now. We're taking a look at the Gartley pattern, and what we're going to do together is walk through the trade. So progression of a day trade, I need to do more of these, and you can feel the emotion with me throughout the trade, and just see how we manage the position and so on and so forth. So let's go to the charts, enjoy the video, like and subscribe. Currently pressing down at our level. So we'll see what happens with this trade. I just wanted to hit record just to get you guys in the trade that I'm currently involved with, so we can go through the emotions together. What's happening here is what's this? Alert TP1. So what's happening right now is I'm currently involved in a Gartley pattern on the Aussie Yen 1 hour time frame, and this is a intraday trade. And I like to do the videos where it walks through a progression of a day trade. And for those who might be new to trading, can also watch along and be involved in these trades as well, without you risking anything. Let me absorb all the risk. Now, the one thing I want to point out with this is I've been on an insane win streak at the moment in the live room, the live trading room that I do, London Market Open. But I also trade intraday throughout the Tokyo session, because I'm based in Australia and this is my time zone, and this is when I trade. The thing that I wanted to point out was I don't expect this to be a winner. However, I have to be involved in it no matter what. So, because it met the criteria, it met the rule set that I'm supposed to be involved with. See, price action dictates whether you're supposed to be in the trade or not. In other words, if price action sets up the conditions that meets the criteria, then I have no choice but to get involved. Doesn't matter what I'm feeling, doesn't matter what the news is saying, it doesn't matter what the chat rooms and the forums and other people's opinions, none of that matters. What matters is every time price action ticks off your conditions, your filters, your criterias, and it meets your rules, then you must be involved, then you must execute the trade and be involved in the opportunity. Now, I don't expect this to win, because I just said before that I've been through an insane win streak. So there's been about 7 wins in a row. And, prior to that, I had 5 or 6 losses, and it just balances itself out. You do this long enough, you'll come to understand that. You know, it balances out. That's why we always talk about averages when it comes to trading. Wanted to hit record, let you feel the emotions right now as price action continues to press down. Let's ask ourselves this question. Is my entry correct? Well, yes. This is a Gartley pattern. I trade Gartley patterns on the Aussie yen 1 hour time frame. Why? Because I tested that. It produces a positive expectancy. Therefore, every time the market presents this opportunity, I have to execute the trade. I have to buy it or I have to sell it. As I said before, I have no choice but to get involved. Now, what comes after a win streak is a drawdown, right? So it's only it's only a matter of time before I get blown up here, and give some money back to the markets. And this is called the cost of doing business, because as you always hear me say, that trading is a business, right? So as we're watching price action press down past this structure level here, so that's what that blue box is, and that's what this line is. We are coming down at structure, okay? But I have my swing low to swing high, back down in. Then market presses all the way back up, failing to retest these highs, okay? And then price action pushes all the way down, hitting our 127 Fibonacci extension. That meets the criteria for a Gartley pattern. Now, I caught this trade a little bit late, so, you know, this was after we came down, and then we came back up, failing to hit targets, and we might fail to hit targets on this one. See how much strength. You might be surprised how price action comes all the way down, just missing your stop, and then immediately turn around and hit targets. But the opposite can happen as well. It can, and I know you've all experienced this as well. Price action can come all the way up, just missing your targets. That's right, and then come all the way back down. You know, so it doesn't matter which side of the market you're on. That does happen. Didn't mean to delete that. Let's get that back here. It's in the right place. Yep. Adjust my targets here. 382. Right there. This is an alert trigger, just to let me know that I have to roll my stops to break even. But what we have to do now, move that over. What we have to do now is, as price action pushes down, retesting these lows, I caught it late, but it met my rules, therefore I'm supposed to be in the trade. Therefore I executed the trade. And of course, based on what I've just repeated myself for the past, I don't know, 5 minutes or so. As price action presses down, now we want to take our Fibonacci like this. I should clean this up. Want to take our Fibonacci from swing high, which is up here, to swing low. As price action pushes down, we need to adjust our Fibonacci levels, because with pattern trading we use fibs, and with target taking we use fibs. Therefore, as price pushes up or pushes down, depending on which side of the market you're on, you have to adjust those fibs. Swing high all the way down to swing low. This is where our targets are supposed to be right now, because as we got involved, our initial targets were up here and right there. But as price action pushes it down, we need to adjust our Fibonacci retracement. We need to adjust our fib levels. Okay. We get involved here. Price action pushes down. We take the Fibonacci retracement and we drag it down with price action. That way, we're actually measuring price action. That's what we're doing. And then we adjust. I also have to adjust my target, my alert level as well. So here, save. Okay, so adjust my targets here. My 382s and now my target 2s. We have to adjust this as well. So we drag that down. Okay, so these are my new targets. Until we keep adjusting, adjusting, and adjusting until price action knocks us out of our position, therefore hitting our stops. And if that happens, then we get out of the position. We were wrong on that trade. And I'm pretty sure, this can stop us out. Well, of course it can stop us out. That's a silly thing to say. But based on 7 wins in a row, you know, it's again only a matter of time before I get knocked and another one, another trade will be stopped out and we'll lose some money on this position. Now, the reason why I mention it's the cost of doing business is when you are on a win streak, you have to be cognitive of, I'm going to give some of that back to the marketplace. Okay? Because winning just can't keep on going forever. In the same way that losing cannot keep going on forever. And if you've tested your plan and you continue to trade that plan, executing trade after trade consistently with discipline, you can survive those loss streaks. You can survive those drawdowns. But, you know, traders don't stick to the plan. And they spiral out of control. They start to emotionally react. They start to revenge trade. They get away from the tested plan. And they give everything back to the marketplace. But after 7 wins, and I'm expecting a loss coming, because after a win streak, a drawdown happens. In the same way, after a drawdown happens, you're bound to get those wins again. That's the cost of doing business in trading. I'm prepared, mentally prepared, to give some of that back to the marketplace. Because again, my averages are going to start balancing up. Towards the end of the year, we will gain more than we lose. Right? Because our data told us that. Our numbers told us that. Showed us that. Proved that. Alright, so I'm talking too much. What I will do here is pause the video. And yeah, you will be emotionally involved with me in this trade. So I'll keep an eye on it throughout, you know, working on website, working with clients, working with students, working on new training, working on education, working on events, working on new videos, etc., etc. I'll keep an eye on it and continue to work, and we'll come back and see if this is this stops us out or if this continues to hit targets. Okay. So this is 1 hour time frame, so every candle represents 1 hour of time, and it is 2:30 in the afternoon my time. And what happened is price action continued, as you can see here. We zoom in like this. Price action continues to push down like this. So this was our previous low right there. And now we're pressing down even lower. So what do we do? Well, we take the Fibonacci retracement, and then I've already done it here, and we take it from this low and then we move it down to this low here, which means what? We have to adjust my alert like this. I'll just save that. And we adjust the targets. Oops. So we adjust the targets here. Again, you know, I said it before, I'll say it again. Expecting to be stopped out of this trade because I have extracted too many pips out of the market. That's why. Yeah, so we'll just wait for this to get stopped out. A lot of selling pressure to the downside. If that happens, again, you know, we go back to the if-then syntax. If that happens, well, then we expect price action to retrace back up into these highs here, or these lows. These lows, support becomes new resistance, right? And then we can anticipate price action moving towards the downside and see if we can look for shorting opportunities, getting all the way down to these lows, looking left, right there. So that's the play. My stop is in the correct place. If we do hit stop, then I know that I'm wrong on the direction of this move, and it was a good trade because I followed my rules and executed the trade. What I'll do now is pause the video again, and we'll come back and update you on whether we're stopped out or whether this is a miracle trade and we go on to hit targets. We don't know. I'll pause this and I'll be back soon. Feel that emotion. All right. And there you have it, traders. We have price action pushing down. I went to make a coffee. There's my logo. I like this coffee cup. Yeah, went to make coffee, and we've got a lot of selling pressure here on the Aussie yen. So this was my intraday trade setup. Get rid of this. Remove that alert. Yeah, and everybody wants to see a trade end in profit as much as I do. You know, and well, that's where the Star Live trading room. That's where it all happens. You know, off the back of 7 winning trades right there, and yeah, not all of them are winners. So if I average about 52%, and I've had about, you know, seven wins in a row, I'm just waiting for that you know, that loss. It's coming. Every trade that wins, you know, that loss is just around the corner. So what happens now? What's the next step? Do we beat ourselves up? No, it was a good trade. It followed the trade plan. It met the criterias. It met the rules. We executed the trade. We bought it up. And after we do that, then our job as a day trader, our job as a professional trader is done. We did the analysis. We don't let emotions dictate what we're doing in the markets. We follow the process. We trade the plan because the price action met all the conditions. So it met our set of rules, and we bought it up. And yeah, after 7, you're bound to get the drawdown. And what I was saying, you know, that's the cost of doing business in the markets. I'm going to have to give some back because, you know, again, we're going to average out. So now what you do is you get rid of your analysis here, which is our pattern trade. And you do it again. So we had structure hitting up here. Price action moves to the downside. We get a move back up here. We get a move all the way down, testing this structure level here. Price action moves up. We tried to get some profit targets here around this level. Back up into here, didn't quite get there. And then the market rolls over, giving us a what? New structure low. So we anticipate, I anticipate that price action is going to retest our previous support, becomes new resistance. Because structure acts like a magnet. We've been over that. And then we can look for a move to retest the lows and then some further towards the downside. But you continue to do the process over and over and over and over again, regardless of the outcome of the trade. Because you know your numbers. And that's the most important. Now I will drink the coffee and edit this video and upload it for you. Win or lose, it's important to have transparency in what we do. And again, that's why we do what we do in the Star Live training room. For those of you who are there, I will see you soon. It is Friday, so weekend coming up. I will be putting together another video for you over the weekend, and we can go through my pair portfolio here, my 9-pair portfolio, and start to incorporate some of the training that you have access to, and walk through the language of the markets. Together, we can identify the ebbs and the flows of price action and see if there's any trading opportunities on the horizon for us throughout next week. But yes, I will see you soon. Be safe always, and talk to you then. All right. Thanks for watching.